Welcome back to Investing Talk Podcast. Today, we're putting a spotlight on a company that's been generating a lot of buzz lately, Uranium Energy Corp. The big question on everyone's mind seems to be, is Uranium Energy Corp a good time to buy right now? We're going to sift through their recent performance, dig into market sentiment, and analyze key financial indicators to give you a really clear picture. Before we jump in, just a quick request. If you find this exploration valuable, please take a moment to subscribe, like it, maybe leave a comment. And hey, if there's a specific company you'd like us to look into next time, definitely let us know in the comments below.
Absolutely. Our goal today is really to cut through all the noise, all the chatter, and highlight the most crucial insights from the material we've gathered. We want to help you understand not just what is happening with UEC, but more importantly, why it matters, especially if you're a potential investor trying to make sense of this pretty dynamic sector.
Okay, let's unpack this then. UEC has certainly shown some strong momentum recently, that's clear, but it's also navigated some, noticeable volatility. What, in your view, has really been driving the conversation around Uranium Energy Corp these past few months?
Yeah, what's truly fascinating here when you look closely is this blend. It's this intricate mix of very real operational successes right alongside, broader, often unpredictable market sentiment. UEC isn't just, another name floating around. It remains a pivotal player, especially with its strategic expansion in North American uranium production. That's big. But like pretty much all commodity stocks, it's inherently susceptible to those larger global market forces. It's almost like a dual narrative playing out, company strength versus market whims.
That dual narrative. So let's dive into the last 3 months. Starting with July 2025, we saw UEC launch new U.S. uranium production initiatives. The sources really highlight this as solidifying their spot as America's largest and fastest growing uranium supplier. I mean, that sounds like more than just a big deal. That has huge implications, right, for energy security and things like that.
Oh, no, absolutely.
But what makes their U.S. production approach so effective now? And what about that analyst chatter on potential M&A?
Yeah, exactly. That expansion in July, it's more than just boosting output numbers. It's deeply strategic. In a world increasingly focused on energy independence, secure supply chains, UEC is capitalizing on that growing demand for nuclear fuel. And at the same time, they're bolstering domestic supply goals. It positions them, like you said, strategically within a really critical energy sector. It potentially gives them this unique, almost government-backed competitive edge beyond just market cap. And the M&A speculation, mergers and acquisitions that just reinforces this picture. It suggests a company with a strong balance sheet looking to leverage these sector consolidation trends to really cement that North American leadership. It's about locking down future supply in a, geopolitically sensitive commodity.
Fascinating. Okay, so UEC is positioning itself strategically. But then August 2025 rolls around and we saw those significant price swings for its shares, tracking that broader uranium market volatility you mentioned earlier. Yet, even amidst that, choppy water, mid-sized asset managers, MFG Wealth Management was mentioned, were reportedly making new purchases, which raises the question, why were institutions buying into that volatility? It feels a bit counterintuitive, doesn't it?
It's an excellent point, and it really speaks volumes about institutional thinking, I think. Their buying amidst volatility isn't necessarily irrational. It signals a continued belief in uranium equities for the long haul. Many professional investors, they view these price fluctuations not as red flags, but maybe as opportune entry points. They're often looking past the short-term uncertainty, influenced by global energy policy shifts like its renewed interest in nuclear power and geopolitical tensions that really underscore the critical need for uranium supply. They seem to be betting on the bigger multi-year trend, not just next week's headlines.
Right, the long game. And then September 2025 brought some highly anticipated news. UEC announced its fiscal 2025 year-end operating and financial results would be released before market open on Wednesday, September 24th. Conference call the same day. And after some earlier upward momentum, the shares actually pulled back about 4% by mid-September. Plus, we've seen retail investment platforms highlighting UEC, asking, is it a buy at current levels? Sounds like a lot of eyes are on this upcoming report.
Oh, they absolutely are. Looking forward, those September 24th fiscal year-end results. They're the most immediate and arguably most significant catalyst for UEC right now. Investors will be scrutinizing everything: production rates, their cost management, and, crucially, the guidance they provide for 2026. This is where we'll get a real sense of whether their stated goal, advancing these low-cost, environmentally friendly uranium projects, is truly on track, and, what that means for future profitability. So, September 24th is the big day. But knowing how market sentiment can swing, are there other indicators or moments between these official reports that investors are likely watching, say, in October or November? What does the immediate future hold beyond September?
Yeah, indeed. While the year-end results are critical, the market is, well, it's a constantly moving beast, isn't it? Subsequent quarterly earnings, the third quarter results are expected in October. They'll provide further operational updates and could certainly drive more volatility. Beyond earnings, we anticipate probably a lot of institutional activity in November. That can signal shifting sentiment among the pros as they reevaluate their portfolios towards year-end. Then in December, we'll likely see Q4 2025 ETF exchange-traded fund rebalancing. That can significantly influence UEC's inclusion and weighting in sector-specific funds, which impacts trading volume and, by extension, price. And of course, the holiday season often brings later trading volumes, which can sometimes amplify price swings on any unexpected news. Okay, so it sounds like a combination of specific company performance and these broader, almost seasonal market movements will continue to define UEC's path.
Yeah.
And tying it back to what you said earlier, it really feels like sector momentum, global energy policy shifts, the whole sentiment towards nuclear power, and those ever-present geopolitical supply risks. They'll continue to be major drivers for uranium equities generally.
Right. Beyond all that market chatter and future catalysts, what about the bedrock, the company itself? Let's really dig into UEC's financial health. What do the numbers tell us about its stability, its potential?
Yeah, a deeper look at their financials reveals some interesting aspects, especially for a, let's say, growth stage commodity company. For the trailing 12 months, UEC reported revenue of $66.84 million and a net income of negative $75.72 million.
Okay, that net loss might raise an eyebrow. It might. But it's crucial to understand that for companies in exploration and extraction, especially those expanding their footprint like UEC, much of this net loss often stems from significant investments. Investments in developing new projects, scaling operations. What seems more important, based on our sources, is looking at their cash position, which seems robust, and their relatively low debt. This suggests they have the financial runway to fund these ambitious projects, despite the current GAAP profitability figure. So while the number shows a loss, the underlying picture seems more one of strategic investment for future growth.
That context is really important,
Yeah.
especially for a sector that requires such heavy upfront capital. How does UEC stack up competitively then in this, rather niche but critical market? What gives them an edge, or what are their potential weak spots?
Well, UEC operates in a specific niche. Uranium and titanium concentrates extraction. What seems to give them a significant competitive advantage, according to the sources, is their diverse asset base. It spans the United States, Canada, and Paraguay. This strategic geographic diversification, it helps de-risk their operations and positions them strongly in key supply regions. Plus, their focus on in situ recovery ISR technology, that's a method that extracts uranium directly from the ground without extensive mining. That can be a cost-effective and environmentally favorable approach. It sets them apart. However, the competitive landscape is inherently dynamic. It shifts with global demand and supply, so they constantly have to innovate to maintain that edge. It's not guaranteed.
Okay. Now, for those of us who follow the charts, maybe live by the technicals,
Yeah.
what's a technical outlook for UEC? Are the patterns suggesting a clear direction, or is it more of a mixed signal?
Looking at the technical indicators, UEC's stock price has traded within a pretty wide range, $3.85 to $13.25 over the past year. That certainly highlights the volatility we talked about.
Yeah, quite a range.
Definitely. And while, past performance doesn't guarantee future results, several indicators do suggest a bullish trend might be building. For instance, the Relative Strength Index, the RSI 14, it stands at 58.56. Now, that's not yet in extreme overbought territory, but this upward trend from typically lower ranges suggests maybe growing buying pressure is building. Similarly, the MCD, the Moving Average Divergence, it's at 0.8001. That positive crossover is a technical pattern widely seen as a classic buy signal, suggesting upward momentum is strengthening. And we also see buy signals across various moving average periods, which kind of reinforces this trend.
So the trend is looking bullish, broadly speaking. But you're still flagging volatility as a key factor. How much does that potential for sharp swings actually overshadow these otherwise bullish signals? Could these indicators be flashing green right before, say, a market correction in the wider uranium sector?
That's a crucial question. It really highlights the art, maybe, of technical analysis. It's not just about the signals themselves, but the context they're in. While the overall trend leans bullish, yes, that significant historical volatility means investors need to proceed with, well, a degree of caution. These bullish signals are strong, but the uranium market is just acutely sensitive to external factors. A sudden shift in geopolitics, a major policy announcement that could easily introduce a sharp correction, even if the underlying technicals look solid. So yeah, signals look strong, but they're always overlaid with the potential for those market-wide ripples. You can't ignore that.
That makes perfect sense. Okay, so we've covered technicals, fundamentals. What are the official analysts saying about UEC? And what are the more formal, identifiable risks investors should be aware of beyond just that market volatility?
Well, analysts generally have a consensus buy rating for UEC. That's a positive endorsement, obviously. However, what's particularly interesting, and maybe a point of tension, is that their published price targets actually suggest a potential downside from current levels.
Ah,
Downside. Yeah. Which creates this intriguing contrast with the bullish technical signals we just discussed. It suggests analysts might be, perhaps, more conservative in their valuation models. Or maybe they're pricing in some of those long-term risks more heavily. It's hard to say for sure. The upcoming September 24th earnings report is definitely seen as a major catalyst that could potentially reconcile some of these differing viewpoints, or maybe muddy the waters further.
right, could go either way. Now, beyond the official reports and analyst calls, there's always that vibrant world of, let's call it chatter and speculation. That influences market sentiment, too. What are some of the rumors swirling around UEC right now? Anything interesting?
Oh, the speculative catalysts are quite dynamic. Industry observers are definitely buzzing about potential M&A for UEC to further consolidate its leadership in North American uranium production, almost like a strategic imperative. There are also rumors, persistent rumors, about UEC securing new U.S. government contracts, driven by national security, energy independence priorities. That would be a huge tailwind, obviously. Some investors are speculating about UEC announcing advancements in its ISR technology that in situ recovery. If they could lower production costs, increase efficiency, that's big. And interestingly, you even hear some retail investors speculating about UEC initiating its first ever dividend as cash flows grow. Though I have to stress that remains firmly unconfirmed by management. It seems quite speculative at this stage.
Okay, those rumors certainly add a layer of excitement, potential upside. But every investment has its flip side. Let's talk headwinds. What are the key risks potential investors really need to have on their radar, beyond just the inherent market swings?
Yeah, it's vital to consider the headwinds. We can kind of break them down into two buckets, stock-specific and broader market risks. On the stock-specific side, UEC faces operational challenges, just inherent in exploration and extraction. Think unforeseen geological complexities or maybe technical hitches implementing their ISR tech at scale. Regulatory changes are also a constant threat. Shifts in environmental policy, mining rules, those could significantly impact operations and costs. Then, on the broader market and sector level, the major risk is commodity price volatility. Uranium prices can swing wildly, and that directly impacts revenue. A sustained downturn would be painful, and of course, global economic conditions. They can shift energy policies, overall demand. Those always loom large. For the most comprehensive picture, honestly, examining the risk factors section of their latest 10K filing their annual report with the SEC is always the best advice. So pulling all of this together, our sources seem to suggest an overall investment rating of about 7 out of 10 for UEC. The rationale points to that compelling, bullish technical setup supported by the analysts' buy recommendations, but with that interesting caveat, that question mark, about potential price target downside from current levels. It's really a picture of strength, but with a definite side of caution attached.
Okay, so for you, our listener, maybe looking to potentially add UEC to your portfolio, what does this all boil down to? What's the immediate and maybe the long-term investment thesis here?
I think the key point is really balancing those positives, UEC's strong growth potential, its strategic positioning in North America, those encouraging technical signals, balancing all that against the very real risks. Market volatility, commodity price swings, potential regulatory hurdles, they're all part of the equation. The upcoming earnings report, September 24th, that's the critical short-term catalyst. It will likely set the tone for UEC's valuation through the end of the year. That's the inflection point to watch closely in the near term.
And thinking about the long game, how does UEC fit into a longer-term investment horizon?
Well, given the current analyst consensus and those overall bullish technical indicators, UEC might be better suited for a longer-term investment horizon. Its strategic expansion of low-cost North American production really positions it as potentially a core holding for investors who are fundamentally bullish on nuclear energy's role. Its indispensable role, arguably, in the global energy transition towards decarbonization. However, for those more inclined toward active management, more short-term trading, there are likely opportunities to be found based on these technical signals and the constantly shifting market sentiment around uranium. It depends on your style.
It seems clear then. While Uranium Energy Corp offers a pretty intriguing investment case, particularly if you have that long-term view on nuclear energy, and crucially, a tolerance for risk, investors should definitely be prepared for continued volatility, especially around those upcoming earnings reports and any broader market shifts. It's definitely a journey, not a sprint in this sector.
Absolutely. What stands out here, I think, ultimately is that tension. The tension between a fundamentally strong, strategically positioned company like UEC and the inherent unpredictability of commodity markets and geopolitical influences. It really makes you wonder, doesn't it? How will this narrative for UEC evolve as global energy demands continue to shift? And what unexpected breakthroughs or challenges, maybe even in areas like uranium enrichment or next-gen reactor tech, lie ahead for the broader uranium sector itself? That's a story that's definitely still being written.
That's a truly thought-provoking way to leave it. A reminder that this whole energy landscape is constantly evolving. We really hope this exploration has given you some valuable insights into Uranium Energy Corp. Thank you so much for tuning in to Investing Talk Podcast. We'll be back soon with another analysis of your sources. And please don't forget to subscribe, like, and comment with your thoughts or any company suggestions you might have for us.